The Dow continued to trade higher today, still coming off that bullish engulfing signal right here on the 200-day moving average. As long as it stays above the T-line, as well as the 3T line, it becomes a high probability setup that this uptrend will remain in progress, likely with the target right up here at the recent highs. As can be seen in the NASDAQ, when we broke out through this resistance level with a trend kicker signal, the implication was that we were still heading higher. And note how the NASDAQ today traded just slightly positive, still closing above the 3T line also. This still is an indication the uptrend remains in a solid uptrend. Being aware of which patterns have the high probabilities of producing big gains, such as when we saw in JRJC that there was a gap up coming out of a fry pan bottom, it put us in a situation where a big price move was capable of occurring. Not necessarily in a 4-day, but at least in an uptrend. However, the nice thing about candlestick analysis is that it puts you in situations where the probabilities of being in a big price move are greatly in your favor. So just recognizing what investor sentiment does time after time, such as a fry pan bottom breakout, puts you in situations where you can be trading at the ultimate time to be getting into a position. This makes situations like our recommendation on MOVE, buying as this is coming out of a fry pan bottom, putting us also in a very high probability situation where a breakout could occur. Basically, candlestick analysis is merely the graphic depiction of what goes on in investor sentiment time after time after time. All we're doing is recognizing where we should be getting into positions based upon what has historically occurred when investor sentiment creates this type of pattern. That'll be it. We'll see you in the chat rooms.